Very warm welcome to all of you for taking time out this morning and joining this webinar. Well, in my 25 years of experience in the wealth management industry, I have got the opportunity to basically deal with high net worth and ultra high net worth families and got a first-hand experience in understanding the challenges and opportunities they face in preserving, managing, and building the wealth, including the wealth that's been built over generations. So I have essentially helped this segment of clients achieve their financial goals. Having seen this industry from very close quarters, having seen how it operates, and also having seen how even the very rich have been let down repeatedly by their wealth managers, I've always wondered how those who are outside this bracket, how do they go about managing their wealth? And have always wanted to do something about it. Because investing for the future is one of the most important things people do for themselves and for their family's future. Nothing gives more joy and serenity in having ownership of your financial future. I also feel it leads to a healthier society and a happier community. So when I was laying down the foundation of Serenity Wealth, in order to give an expression, I had the opportunity to give an expression to this. And therefore, the way we built Serenity was with the overarching mission of helping people across all income levels, across all age groups to achieve their financial goals. And SereneKit DIY is essentially a culmination of that desire, of a long cherished dream. In fact, it's one of the pivotal steps planned by Serenity towards taking the wealth management industry beyond the confines of one-on-one relationship between the client and wealth manager. And why would I do that? Why would I even cherish such a dream? And I will talk about it more in the coming slides. But before that, let's just have a quick introduction of the team, some basic concepts, and also let's understand the industry landscape. So besides me, I have 3 members in the founding team. We have Akash, who is the geek of the team. While he joined the team in June of this year, he's been working on the project since January 22, and he's the architect behind the risk assessment tool. Tanya, she joined Serenity in April 22, and she basically handles the marketing communications. In fact, she's the one who's really put together this webinar for us. Yash, he joined Serenity in April 23. He comes with a 5 years experience in the field of wealth management, and he's a certified financial planner. Let's just understand what exactly is wealth. What does it mean? Incidentally, the word wealth comes from this old English word weal, which means wealth, welfare, and well-being. However, the way we have looked at wealth in recent times, it's largely got to do with money and your savings, but there is a larger meaning to it. Because it's a culmination of years, if not decades, of the effort, the hard work each of us has put in to build our nest of savings, time which we have spent away from loved ones. And it really does not matter how many zeros are there in front of it. For each of us, whatever is our nest of savings is our treasure trove, because that's our gateway towards a healthy and joyous future. Let's now move to why should one really go about managing one's wealth. Next slide. You know, we can't let it idle sitting in the bank account, because inflation will erode your wealth. If you see 100 rupees in 30 years is almost 500. So one has to ensure that money is not just left idling around. At the same time, we can't be reckless. Markets can be brutally volatile, and it can sort of go up and down at times when you are not prepared to deal with the volatility. What is therefore needed is a well-managed portfolio that can help you reach your financial goals. Let's understand the industry landscape, and this is a very, very important aspect which we must understand before we get into dealing with any wealth manager. As per the rule of the law, or as per the rule of the land, defined by the regulator SEBI, there are 2 types of wealth managers. One, who are the distributors, The distributors are similar to any industry where you have a manufacturer who's manufacturing products. In the wealth management industry, it is about investment products, be it mutual funds, PMSs, AIFs, and what have you. They appoint their agents who are called as distributors. They earn commissions from these manufacturers. They effectively end up being in a conflicted position because they earn only when you buy the product for them. In the current structure, 99% of the wealth management industry are distributors. On the other hand, there are barely 1% of the wealth managers who are what is called as RIA or registered investment advisors. They earn by way of a fee which you pay them when you engage them. They are non-conflicted. They work on your side. In fact, they are legally obligated to protect your interest. And one key difference is that the RIAs, the advisors, they source products directly from the manufacturer. So as a result, there is no loss of commissions for you. However, the problem statement is like this, that barely 1% of the industry today has taken up the license. Most of the others, they haven't yet migrated to this. The reasons could be many. It could be increased compliances. It could be lower margins, perhaps. However, I firmly believe if someone's motive is really to manage a person's wealth, he ought to be working as an advisor. Let's just move forward. The market structure. There are broadly 4 types of agencies which you will come across. Banks and the non-banks. These are typically the larger players, the institutions. They primarily function as distributors. They do offer advice. They have a section of their firm operates as a registered investment advisor, but it is reserved for select few. Typically, the minimums are 25 crore plus. Then you have a whole section of mutual fund distributors who are distributing all types of investment products. You have the RIAs, the standalone RIAs. These are smaller setups, and they focus on one-on-one advisory to the clients. And lastly, you have the DIY platforms. They play a very important role. They offer you research on the investment products and they help you execute transactions. They can either allow you to invest in regular plans or in direct plans. So that's the structure of the industry, really. Let's move forward. As we saw, and this is the pyramid really, the 99% of the wealth management industry today is conflicted. Of the remaining 1%, which is the RIA, they also, and it is pretty natural, that they also like to maximize the return on the time invested. So they tend to focus on larger clients so that they can get more bang for the buck. Also, lastly, there is a belief at both ends, both at the wealth manager's end and at the investor's end, that there is a human interaction which is needed in order to deliver wealth management advice. Coupled with the noise in the financial markets, a lot of volatility, media also amplifies the confusion. If you see the vocabulary which you read every day in business newspapers, it adds to the cycle of greed and fear. Our friends also, their advice also adds to the noise. Many times we hear of their exploits in the financial markets and we get swayed by it. So friends, the Indian wealth management industry is broken. If you look at a parallel, let's say the US markets, about 45 to 50% of the wealth managers are functioning as registered investment advisors, which ensures that quality advice, non-conflicted advice reaches many, many more doorsteps. There is a structural flaw here. There's a design issue here. As a result of which, a very large segment of our investor base is underserved and oversold. So what can be done to fix this? This needs to be fixed. Before we get there, Tanya, just go back. When I put myself in the shoes of an investor, I wonder that how do I go about managing my wealth? Do I wait for my wealth manager to take the license? Do I continue to hope and pray that my wealth manager will not sell products? There are solutions. One such solution is clearly find a reputable RIA. It's a small community, about 1,000 odd RIAs, out of which a few hundred are really functional. Find a reputable RIA. Please ensure that the RIA is solely dedicated to advisory and has no other business, no other income. Because if there are other income streams from distribution or from in-house products, that also leads to conflict of interest. Incidentally, Serenity also manages one-on-one advisory relationships through its consulting and premium fee plans. There is another solution. What if you can be your own wealth manager? Let's understand that through this video.
When we think about wealth management, what's first and uppermost in our minds? Steady income, rising expenses, investing in shares, bonds, gold, real estate, tax saving, what? How do I decide what, when, how, and who decides this for me?
It's your money, you decide.
Surely I don't have that expertise.
With Serenity's DIY toolkit, you will know how to manage your wealth.
Really? How much time do I need to spend? Accounts, finances, numbers scare me.
Half an hour is all you need, all at one place.
That's all? Tell me more.
To know how Serenity's DIY toolkit helps you become your own wealth manager, please click on the link below and register for our webinar.
I surely look forward to becoming my own wealth manager.
Super!
So friends, SereneKit DIY is what we believe is a solution which will address, and the whole desire, the dream, which, as I mentioned earlier, which I had been nurturing over the years, was to find a solution for that lot of investors to whom quality advice does not reach, either because the advisory community is focused on a segment above a certain threshold, or they are focused on one-on-one relationships, as a result of which their reach is limited. Therefore, the whole idea was that can we put together a platform through which you can become your own wealth manager? At the heart of it lies our risk assessment tool. And we'd like to quickly go through a short video, which will give you a sense of how the risk assessment tool really works. You can go to the next slide. Yeah, it's a SaaS-based, algo-driven investment tool. It helps you in estimating your required rate of return, which in fact is an innovation which Serenity is doing. So far, from what we have seen of the Indian wealth management ecosystem, no other wealth management firm is helping its investors compute the required rate of return. It is mainly about the return an investor wants. We believe what is more important is to first estimate the return you need on your savings so that you can fulfill your financial goals. So this tool helps you estimate the required rate of return, helps you map different types of risks. We won't get into details in the interest of time. It helps you plot what is called as the investment policy statement and various facets to it. Incidentally, most of the large, wealthy families, the ultra HNIs, the family offices, they are guided by the investment policy statement. It is a document which basically sets the do's and don'ts, the rules, the framework for them to go about planning and executing their investment decisions. The tool also helps you in projecting your net worth and cash flows. Let's go to the video now. Yeah, so this is the first screen really where you put your personal information, your primary income, how much you're currently earning, your expected growth rate, other sources of income. There can be many sources of income. You can add here your essential living expenses today, what you're spending today. We inflate it using the inflation rate. What would be your post-retirement expenses? Will it drop? Will it stay? Your current loans and liabilities, your future loans. We have a loan calculator here, which will calculate the EMI. So all this data which you are inputting here is actually getting captured at the back end, and using arithmetic, we are estimating your required rate of return. The future large expenses are really an expression of all the large expenses you might wish to incur, be it on your education of your children, be it on marriage, be it on buying a house. So one is to put down your current expenses, and second is the future expenses. Yeah. So this gets plotted at the back end, and then our algorithm runs and calculates what is that required rate of return which you need on your savings year after year. Let's continue. So in this case, for instance, the required rate of return comes to 9.75%. Now the key is, can this individual, one, is his portfolio currently generating that return? Let's move. Number one. Number two, is he able to tolerate the risk which will come with this return? We ask you 15 questions to test whether you can tolerate the volatility of the market, the noise levels of the market. That allows us to then map your risks. You see, the questions are basically how would you behave in different market situations. We also try to ask you questions on how aware you are about the various instruments. Because friends, there is no point complicating your investment portfolio if you don't understand the instrument. So this is the questionnaire part. It's your personalized risk dashboard where you get various numbers. We can continue the video. And of course, at the end of it, you register for SereneKit. After having registered, this is the first document which you get, which gives you, as I mentioned, your investment policy statement. My whole idea, as I mentioned, when I used to wonder as to what do people outside that bracket really do, and when I would be putting down these investment policy statements for the ultra HNI families I would work with, I used to wonder, does not everyone deserve this? Surely they do. And that is exactly what we are attempting to do with SereneKit DIY. Please continue. This has a very interesting feature called the minimum return you might get in 1 year and 5 years. So what does SereneKit DIY really offer? Let's understand that. It's a variety of features. You get research across product categories, be it mutual funds, be it NPS, be it AIFs, be it PMS. You get to construct your portfolio in line with your investment policy statement. You get guidance on how to execute your trade. Today, I find a lot of my friends and family members and others who are executing their investment transactions under regular plans, which, as I mentioned, it is expensive. You can directly source your products from the manufacturer. So we help you do that in a secure, paperless, and cost-effective way. We help you track your portfolio. There is one, and I'll just leave you with a nugget, that it's very important to maintain your investment transactions from a separate bank account. Today, all of it happens from one single bank account, and it is not easy to measure the portfolio. In fact, I always look at it this way, that I, as the creator of wealth, I'm also the custodian of it for my family, and I must ensure that it is getting tracked properly, it's getting invested properly, and it's not idling in my bank. We help you do your cash flow and expense planning. There is a one-time portfolio review which we do in order to ensure that your portfolio is aligned with your risk appetite and investment policy. And very important, we help you understand how to protect your wealth and transmit it to your loved ones, be it through an asset register, will, insurance. In fact, SereneKit is a tool which can be used even by beginners, because when you've just begun your career, you started earning, you can use this toolkit so that you can plan your investment journey and not make the mistakes which many of us have made. How to get started with SereneKit? From now to 31st August, you can register your interest. There is a QR code here. Request you all to take your mobile phones out, download the QR code. You will go to the page in our website where you can sign up. You are essentially registering your interest. Let me add here, in the first phase of SereneKit DIY, we plan to onboard 100 clients. And that onboarding process will start from 1st to 15th September. Can we move to the next slide? Where it will entail account creation, where you sign up. You have to enter our online advisory agreement, complete the online KYC, and make the payment. This process will happen from 1st to 15th September. What are the benefits? We've highlighted all of them here, but I would like to stress upon the last two really. You know, the noise system can play havoc with us, with our investment decisioning, and leads us to make a lot of blunders. The noise system is something which, in fact, even gets perpetuated by the investment industry. And as I mentioned, gets sort of played up by the media in a way. And the damage which it does to your portfolio or to your savings is immense. Second, it's very important that you build a responsible yet easy relationship with your money. I think for us, these are two of the biggest benefits you get with SereneKit DIY. Of course, we help you make better investment decisions. We help you automate critical tasks, and we help you save money on commissions, etc., on sourcing your investment products. So friends, please become your wealth manager today. Be our guest. You can use the risk tool, or by paying 12,000 rupees per year. Well, sorry, it's not 12,000. Actually, it's just 33 rupees per day. You can become a client of SereneKit. As I mentioned, we are onboarding 100 clients in the first phase. In future, our standard pricing is 25,000, but we felt for the first phase, for the first 100 clients, we've kept the pricing at 33 rupees per day. There are some other questions you might have. Quickly, we can go through them, and then we'll open up the floor for more questions, which you can put down on the chat. What's the minimum portfolio requirement? There is no minimum. It is open to all. In fact, as I mentioned, it is very relevant if you've just started earning or you're about to start earning. It'll be a great induction for you. Is this only for the retail audience? I do get this question often. You know, we somehow don't like to divide any individual in silos: retail, mass affluent, HNI, ultra HNI. We are a net worth agnostic firm. For us, every investor is important. And of course, this product is for all. How does the advice reach you? It's an online product, online tool. So through our risk assessment tool, through exclusive webinars, through two-way email communication. And we'll, of course, elaborate on it more once you have signed up for SereneKit. Will I get my MIS and will I be able to execute my transactions? I'd like to just emphasize here, as coming to the execution of transactions. In the beginning, when we were showing you the industry landscape, we talked about the DIY platforms. So they are doing a great job. They've built very robust platforms, and they help you execute your transactions under direct code. We didn't want to reinvent the wheel. So essentially, they start from where we end. We guide you on which platform to use. If you're not comfortable with online tools, we guide you how to execute your transactions still in a seamless manner. We can elaborate on it, as I mentioned, once you've signed up for SereneKit. Will I get my MIS? No. And I'll tell you why. Because generating MIS, the way I have seen, and I have seen in my last 20-25 years, most of the MISs which get generated, they are not really capturing the essence. There are conceptual inconsistencies. We believe with some guidance, with some protocols to be followed, you can generate your own MIS. We will help you do that, and we'll help you measure your performance. With that, I come to an end of this webinar. As far as our talk is concerned, we'll be very happy to take on any questions. How can I do direct MF schemes without much hassle? Is a question from Saurabh Mittal. Hi, Saurabh. As I mentioned, there are several platforms. It won't be right for me to take any names lest I miss out some important names, but there are a plethora of execution platforms. If you are comfortable doing it online, we'll guide you, of course, but to answer your question, you can use those platforms. Typically, many of the banks also through their net banking allow you to invest in mutual fund. However, from my understanding, you can only invest under regular plans. You can even check with your bank, but they typically allow you to invest under regular plans. In addition to that, what we have done, we have entered into SLAs with a couple of institutions. And if you are not comfortable doing your transactions online, we will help you execute your transactions through email instructions. We can elaborate on that more as once you've registered for SereneKit. Is any part of the investment process to achieve the RRR automated, or you will be guiding on how to implement the trades and investments? Hi, Hemal. Thanks. The first part of estimating the IRR is completely automated. The risk mapping is totally automated. Your investment policy statement, the various norms to be followed within that, the rules, the exposure norms, the rebalancing norms, all of that is automated. Beyond that, we will be guiding you through webinars and through specific two-way email communications. We'll elaborate on how the process will work to further help you to guide you on implementing your trades and investments. Yes, Saurabh.
Ashish, I heard from someone that the camps itself also allows you to register and apply for direct mutual funds from there.
Of course.
And which, if integrated with the cash statement, which can come on a monthly basis. So I get it, but I don't know. I mean, someone else, a friend of mine who is registered for everything, does not get cash statement. So one is that how do you register for cash statement that helps you to get your entire portfolio on a monthly basis? Or can we actually access that statement on a real-time basis? And secondly, can you help on the scams part of it, rather than going through any service provider who will always might have some intent of promoting some scheme, or want to do some kind of ancillary business with me? That will be really helpful for me.
Sure. No, so Saurabh, we've got all this covered. You're right. In terms of the execution platform, you don't want to be sort of bombarded by noise, which can happen. However, the important part, if I may address your question, is that, execution of trades is, of course, a very important activity. We deliberately have chosen, not just for the platform, but even for a practice mode of not building an execution engine, because that problem has been largely solved. For me, that's the last mile problem. The problem before that is about putting together your allocation plan. Because today, what I find many times, investment becomes the end. It actually is the means to an end. It's not the end. So how does one go about planning that part? And studies show, and there have been a pivotal study done on this in 1986, quoted by the entire wealth management industry, that 93% of your return outcomes get determined by your investment policy or asset allocation and those kind of decisions, 6% by the products, the schemes, etc. and all, and 1% by market timing. So we are really focusing on helping investors solve the 93% problem and, of course, the 6% problem as well. We cannot do anything about the 1% problem, because market timing, as I always said, there was only one Nostradamus. We can't predict the future. Now coming to execution, there are many modes to execute. CAMS is one. There are many online privately managed platforms. I wouldn't like to name anyone, as I mentioned, lest I miss out anyone. So I think that problem is largely solved in my view. And we can talk or we can exchange notes further on this, Saurabh. In terms of, there are a couple of questions on confidentiality of data. Is that taken care of? Very important question. Yes, it is. We have taken care of it in several ways. One, of course, the data is encrypted. In terms of access to data. It is completely restricted to the technical team. The idea for us to take your data is, or to ask you to put your data online, is not to pry on your data, for sure. Your data is not for sale. As I mentioned, legally, we can have only one source of income, which is the fee we earn from you. And in fact, there is a data security tab, which which is there on our risk tool, which puts down all the various measures we have taken to take care of confidentiality. But that's a very important point, and we are fully seized of it. One more question is there. You are typically targeting retail. Do you think an ultra HNI would be comparable using your platform? Looks very basic, is good enough. Someone used to advisory across the table, the steep levels would be reluctant. Of course, Ami, your point is well taken. As I mentioned, the way to look at this is that today, barely 1% of the wealth management industry is giving advice. The rest of the industry is a distributor who is effectively, strictly speaking, functioning as an agent of the manufacturer and therefore is conflicted. Now, that 1% is also focused on the people with a large threshold of corpus, 25 crores plus, as I mentioned. There are a few hundred RIAs who are focusing on the segment below, but they are limited by their reach. So what does an investor do? As I mentioned in the beginning, does he wait for the rest of the wealth managers to decide to take the license? If they had to take it, they should have taken it by now, number one. Or does he hope and pray that the wealth manager whom he's appointed, who is a distributor, does not sell a product? I think that's not a very comfortable situation for a very large section of society to be in. And where I disagree, ultra HNI is, the way it's defined, is 200 crore plus. HNI is of wealth, which is $25 million. HNIs, of course, is $1 million plus. I find a large number of HNIs also who are at the receiving end of wealth managers, simply because they're dealing with somebody who is conflicted. So your point is taken. If you can identify a RIA, and which we have mentioned, who can give you one-on-one, Serenity Wealth also has a couple of fee plans where we do one-on-one. But we really didn't want, we wanted to put a product out there, and there's an opportunity which we saw in it where a large section of this segment can straight away become their own wealth managers. They are taking the wealth manager out of the equation by empowering themselves with the guidance, with the knowledge, which we will provide them to become their own wealth managers. So that's the real idea behind SereneKit DIY, to take the wealth manager out of the equation. I hope that answers your question. Thank you so much, everyone, for joining this webinar, for taking your time out on a work day. We plan to do one more webinar on a weekend, perhaps the next weekend. We've still not finalized the dates because we did get feedback that weekdays become a little difficult for people since it's a working day. But thanks nonetheless for taking time out on a working day, and look forward to all of you downloading, signing up for SereneKit, registering your interest, as we mentioned, over the next 2 weeks from 1st September to 15th September. We plan to onboard the first phase of 100 clients. Thanks a lot. There's one more question which has come. If there are 2-3 members, would you still suggest investment from one bank account? Oh no, Hanshu, what I meant is each of the members should operate a separate bank account for their investments. This is something which, at least as I mentioned, having dealt with a certain segment of investors, I have insisted these families, and some of them have many members in the family. Besides individuals, there are companies, LLPs. I've always insisted that you must have a separate bank account for your investments. Only then performance tracking can be done. Okay, a very interesting question. Thanks, Dave. What's the development roadmap for SereneKit? Well, we've got a lot of it mapped out today. Besides the risk tool, which is an automated part of the journey, we will be providing you reasonably automated modules on building your asset register, writing your will, and various such modules. That's really the other part of automation. In addition to it, we've also worked on how, as someone mentioned, as Saurabh Mittal earlier asked, about the whole concept of reading your cash statements. So that is one more development which is underway, through which you can upload your cash with us and we can then give you specific advice on it. So that is a development roadmap, but a lot of it is already mapped out. Any such tool available in India or globally? If so, how does SereneKit compare? Look, as I mentioned, the concept of required rate of return is something which I haven't yet come across in the Indian wealth management ecosystem. It is a concept which is widely available. It's not something which we have sort of invented. It is there in academic papers. It is a recommended approach because, however, most of the wealth management firms ask the investor what return he wants. Fair, it's your money, but it's important for you to first know what is that return you need and can you digest the risk which comes with it. So that's a very, very important question. Now, this framework, at least in India, I have not come across, at least in the public domain. Maybe there would be advisors who would be doing this one-on-one with their clients for sure. I'm not aware of it. I mean, what will be the revenue model? Hi, Saurabh. Thanks for asking. We did mention the revenue model is simple, 33 rupees a day for the first 100 clients, which adds up to 12,000 for the first year. A fee which we earn from you. In addition to this, this is the platform or the online tool which we built. We have a practice mode where the fee structures are different because there we are doing one-on-one advisory. You can go visit our website and access that. Hope that answered your question. But our fee structure is only one. In our balance sheet, there'll be only one income. And that's a very important consideration. Ask your wealth managers what are the income streams coming into the firm's balance sheet. Ideally, it should be only one, which is the fee they earn from you. Mobile app, we haven't given it a thought yet, Dave, because we believe putting down your details, the whole thought process required behind it, it might not be so easily done in a mobile app. But we will, if there is demand from our users, we will consider building a mobile app. As of now, what we have is a web-based app. It can be used on your mobile, but we always suggest, look, at the end of the day, and we would like to end, if we can, there's one more question, but Tanya, if you can go to that last slide of the bird and nest. I believe, friends, that you all have invested so much time, and we do on every given day, building or creating this nest of savings. It requires some time allocation to manage it. We are very clearly into a B2C segment, really, where we are directly dealing with customers. And our current thinking is clear that we would like to stay that way. Yeah, but I'm hoping, and I hope many other wealth management firms up the ante and develop a similar tool or do even better at it. There is no rocket science. Of course, it requires a lot of effort. It requires intent. But, well, no, we are not currently thinking of, at least for the next 1 year. That's our current thought process of getting into a B2B segment. Having said that, a distributor can log in and get their clients to log in to our risk tool for the guest part of the journey, which is the journey which can be accessible to all. For getting the entire part of the journey, you've got to sign up with Serenity Wealth under the SereneKit DIY platform. But there is a significant part of the journey which you can access for no cost. You can perhaps show our tool to your clients. Thank you so much. Thank you so much. Really a delight to have had all of you on this webinar. The investment in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BSL, certification from NSI no way guarantees performance of the intermediary, provides any assurance of returns to investors. Absolutely, we do not promise any returns. Serenity Wealth is a SEBI registered investment advisor. Currently, I have taken this license in my individual name. The registration number is mentioned and the registered address is given there. Thank you so much. Thank you so much. It's been a pleasure. Bye.